Welcome to HUL's June quarter 2023 results briefing. Let me start with FMCG market context. With most commodities remaining stable in the quarter, inflation continues to moderate. Consequently, we are seeing a gradual recovery in market volume growth. FMCG market volumes grew in mid-single digits, led by urban. Rural market volume, which at one point in time was declining in double digit, has just turned positive in this quarter. Having said that, we need to be cognizant that these growths have come on back of volume decline in the base. If we were to look at market growth on a 2-year CAGR basis, total volume growth is still marginally negative. With softening of inflation, competitive intensity in the market is increasing. Media deployment, which saw a steep reduction during the high inflationary period, has started normalizing and now is almost back to 2019 levels. We are also witnessing resurgence of small and regional players, many of whom had vacated the market during the peak of inflation. Now let me talk about HUL results for the quarter. We delivered a resilient and competitive performance with underlying sales growth of 7% and underlying volume growth of 3%. Talking about our bottom line performance, EBITDA margin at 23.6% improved 40 bps year-on-year. Profit after tax before exceptional items at rupees 2,500 crores was up 9%. Net profit at 2,472 crores increased 8% year-on-year. Speaking about our market share performance, our growth was competitive with more than 75% of the business winning market share, both value and volume. On a 2-year basis, we continue to significantly outperform the market. Moving on to performance across our 3 segments, Home Care delivered yet another quarter of robust performance and grew 10% on a very strong base, balanced between volume and value. Beauty and Personal Care delivered a volume-led growth of 4%. Foods and Refreshment grew 5% with near flat underlying volume growth. Margins in all 3 segments remained healthy, with Home Care at 18%, Beauty and Personal Care at 26%, and Foods and Refreshment at 18%. Talking about some of our innovations, Dove Men Plus Care range, Indulekha soap, Knorr Chinese sauces, Brew cold coffee, and a new range of water purifier by Pureit were launched in this quarter. Surf Excel Matic Liquid was relaunched with a superior formulation. Moving on to our margins, as we had indicated, we remained focused on building back our gross margin and stepping up A&P investments behind our brands. In this quarter, our gross margin improved sequentially by 140 bps, and we stepped up A&P investments by 110 bps versus March quarter 23. Speaking about the progress made on some of our key sustainability initiatives, during the quarter, we signed a strategic partnership with JSW Foundation to establish 10 new Suvidha centers in Mumbai. These new centers will benefit 2 lakh people annually, saving 300 million litres of water over a decade, and will run on solar energy. In association with Genpact, we launched Be Seen, an accelerator program to help scale businesses owned by minority and underrepresented groups in India. This program aligns with our ESG goal of increasing procurement from diverse businesses. FICCI has set up a Center for Sustainability and with leadership and partnership with HUL as a founding member. The center aims to accelerate India Inc.'s climate action in line with government's net zero commitments embodied in the Panchamrit framework. Now moving on to outlook. Near-term operating environment continues to be volatile with weather-related risk. We need to be watchful of the progress of monsoon and any impact of El Nino on cropping and rural demand. We expect market volumes to recover gradually due to high levels of cumulative inflation and the fact that consumption habits typically recover with a lag. In this context, we continue to manage our business with agility and take actions to ensure long-term 4G growth that is consistent, competitive, profitable, and responsible. Speaking specifically about outlook for next couple of quarters, price growth will further tail off with lapping of high prices in the base and sequential pricing reduction. If commodities remain where they are, we expect our price growth to be near flat or marginally negative in next couple of quarters. With inflation moderating, the competitive intensity is likely to go up further. We remain focused on providing superior value to our consumers, building back our gross margins, and investing competitively behind our brands. We expect to sustain our volume growth momentum. With this, I complete my prepared remarks, and now we can take some questions.
Right. Thank you, gentlemen, for giving us a detailed brief into what you see going forward. But a two-part question. The first one is for Ritesh. Ritesh, you said that competitive intensity has increased even as the consumer environment is gradually recovering. So what proportion of your gross margin savings would you have to reinvest in ad spends? And to that extent, what is it that you can guide for in terms of margins going forward? Because volume, if it sustains with flat price growth, you know what the top line trajectory would be. And the second one, I would like Mr. Jawa to answer, and because it's the first time you are speaking to all of us here, in a process-oriented organization like Hindustan Unilever, what kind of personal aspiration do you have in your era? And linked to that, what are your near, medium, and long-term goals?
So let me pick up gross margin then, Rohit, I'll hand over to you. So gross margin, as you know, the peak of inflation in September quarter 22, we had lost almost 600 BPS margin. This was because we saw very high amount of commodity prices, and we never priced our products to the peak of inflation. From the 600 BPS of margin dilution with gross margin, in last 3 quarters, we built back 400 BPS, including 140 BPS in this quarter. A large portion of that, 300 BPS, has got invested back in A&P. Our A&P, which was more like 7% 3 quarters ago, and this quarter, as we reported results, is roughly 10%. So hence a large portion has gone back into investing. Overall intensity of competition and also media intensity in the market has gone up. Media investments, if I look at both GRP, also the new age media put together, we're almost back to 2019 levels now. And hence, if I look forward, it's a very similar, in our view, the focus will be to keep driving gross margin improvement and investing behind A&P as you see further amount of dial-up on competition intensity.
So what happens to the EBITDA margin?
Yeah. So this is a time where the line of the margin which is most important is gross margin, because we have to generate fuel to ensure that there's enough amount of investment for driving innovation, for driving overall market development, and hence we are at this point in time squarely focused on driving gross margin. And you've seen the amount of substantial margin that we have increased in the last 3 quarters. More work to be done in that space. And as that happens, idea is to ensure that we're able to further dial up A&P investment. Where we are with the margins today, this quarter you've seen we declared 23.6% margin. It's a pretty healthy margin where we are. Hence focus will be to drive competitive volume growth, sustainable volume growth momentum, and keep investing behind A&P fueled by gross margin. That will be the focus for us from a P&L management perspective.
Just a follow-up on that. So the margins that we've currently gotten, would that be something that you would look in that range? EBITDA margin is what I'm talking at, or maybe we could expect a bit lower?
Yeah. So our margin, as I mentioned, is squarely focused on the line of gross margin at this point in time. We want that to go up. And of course, what comes in EBITDA ultimately get driven by amount of money that we need to spend in A&P. So that will be more of an outcome this point in time.
Rohit.
Right?
Yeah, but thanks a lot. It's a really good question to start with. First of all, I'm very happy to be here and to speak to you, and hope to have more of these conversations. And as my time develops and we have more things to discuss. But let me first start by responding to your question on how I feel about the whole. So first of all, I'm very excited to be back home, and it's been a long time since I worked in the company and in the country, but this is indeed the company and the country of my birth. So I feel very proud and privileged and honored to have this responsibility. So I'm very excited, and I'm very hopeful, very optimistic about the future. There are many reasons why. To start with, I think India is at a really, really important moment in its history. The opportunity, we all know about that, is immense. And the next decade, we've heard that from many people, is going to be India's decade. So to be here at this point of time, being in charge of the biggest and the most aspirational consumer goods company in India is really a matter of great privilege and honor. So I feel very, very honored about that. I think as far as the company is concerned, I've been now meeting consumers, customers. I've been around the category teams. I've spoken to functions. I've been to one factory or two. So I have a pretty good sense of the business. And I must say, having come back, I feel very, very proud of what's happened, and the business is in a great shape. It's a great business, very, very strong positions when it comes to market leadership positions of our brands. I see very strong, to your point of process, very, very rigorous processes. Our talent, depth, and quality is absolutely first class. We have also done amazing amount of work on community. So I think we're living our vision and purpose of what's good for India is good for Hindustan Unilever. So I feel the impact. I see the programs, and many of them, they are flagship programs. They're making a big difference to the communities. And above all, I think our focus on our strategy is also, I feel, very, very consistent, very disciplined. So if you look at the 2 or 3 fundamentals of driving our portfolio through market development, premiumizing it, driving our brands through purpose and innovation, winning in channels of the future like e-commerce and eB2B, and essentially building distinctive capabilities like winning in many Indias, our Symphony cost program, and our talent. I think I'm very excited with all of that which I inherit. And my intention now going forward is to take this to the next level. And the market in India, as I mentioned, is changing constantly. So our strategy will evolve, building from our strengths that I've just mentioned. And we will, of course, account for the changes. So whether it's deepening our premiumization effort, or getting further in our Reimagine HUL digitization program, or in fact bringing sustainability even further into the heart of the business while maintaining our core brands, our reach, our distribution strength, those moats. That's really how I see the business going forward. And I think we'll have more opportunities, and as I have more time, we will speak more about this, and there'll be a capital markets day towards the end of the year as well. So yeah, watch the space. There's a lot going on here, and lots more exciting things to come ahead.
Is there anything personal which is of specific interest to you? Any category, any area, any form, function in Hindustan Unilever or from your experience at Unilever that you would like to bring to Hindustan Unilever?
So I was here 15 years, and my first day in Unilever was in the market, selling, and so that's always been close to my heart. And when it comes to the last 2 decades, of which last decade is spent in countries like China and Philippines that have been through their own evolutions, and particularly China that's seen this massive growth in digitization and premiumization. And in a sense, that is a sort of forebearer of the future. It's not going to be exactly the same pattern and trends, but I see India would follow a similar trajectory, in fact, maybe even faster, given the India tech stack and the hardware and software infrastructure that's being built. So I would see bringing the kind of future that I've already seen in other parts of the world to India would be something very personal, because you don't need to learn the same lesson twice. And I think with the India centricity to it would be something that would be how I'll bring more and more of that color into the business and our discussions.
Right. Rohit, if I could just ask you one question. One thing you were mentioning is in terms of premiumization that you spoke about. So obviously 1 month in HUL as your new position. Now, strategy for beauty care, that side of premiumization. Is there anything specific that you are looking at on that front? And also anything from the global Unilever products that are there? Would that be something interesting or attractive that you find that could work out well in the Indian markets then?
So I think the beauty and well-being and beauty care has been our focus and emphasis, and we've seen that in what we've said before and what we've done. So I think whether it's to do with acquisitions or what we've done around investments, and we already have a very strong position in the beauty care market, particularly skincare. As you know, we have 4 times the relative market share. So it is our absolute intention, commitment, and promise to try and make that even bigger. And it's not new news in that sense, but we do see a lot of opportunity in beauty and well-being. We are going to make more and more investments in that space, whether it's through expansion of our portfolio, including in the premium prestige area, whether it's through our capabilities in the market, whether it's through sort of the entire beauty culture and also talent and depth. So this is going to be an area that you will see us investing further, and that's not different from the past. We're just going to take this to the next level.
Okay. Ritesh, for you, in terms of, HFD segment, horlicks, obviously we have seen that inflation, milk inflation continuing. Is that anything you are seeing it more of a cyclical issue, or is there some structural issue? What is it that, because that impact has been there for quite some time. So if you could just help us understand that.
Sure. For HFD category, again, remember, I just go back to 3 or 4 big actions that we had to do. Integration, done, tick. Big job we had to do in terms of unlocking savings and efficiencies in the business. We have communicated that our entire savings today pool is higher than even the business case we had imagined in that space. Big job already done in terms of market development actions. Over 2.5 years' time, more than 100 million home-to-home contacts we have done with that. Boost we took nationally in terms of activating it. The Plus range, science-backed portfolio which has got launched. We took actions in terms of making the whole portfolio more accessible with the 2 rupee, the 5 rupee sachet and the poly packs. So all the actions have been put into place, including stepped up communication on both the brands. We spoke about that we have started seeing results this quarter as well. We have had good growths in HFD portfolio. And of course, the entire reality of milk inflation does persist. Over the last 2 years per time, be it skim milk powder, be it fresh milk, that has inflated meaningfully. And for a consumer to enjoy a cup of Horlicks, and B also a cup of milk as well, which is required. And we have seen that getting impacted. And hopefully in times to come, we start seeing inflation overall abating. We have seen that in many parts of the portfolio. If that start happening for soft commodities as well, that should augur well. But all fundamentals of HFD are strongly in place. And all the actions that we've done are rightly, squarely delivering to us as we speak.
Just to follow up on that,
Yeah.
Was the HFD category by any chance impacted by the controversy of high sugar content in this? I mean, a large competitor had that entire controversy, as a result of which, was there any impact on Horlicks or Boost or your brands?
No, as you know that the amount of sugar which we have in Horlicks and Boost is very mindful, and which is why the credentials are extremely strong for these brands, and we have not seen that impact coming in. For Horlicks, I think it just goes back to the same job. We have to build penetration and consumption. Overall,
Increase over the
yeah, penetration since the time we acquired the business, last 2.5 years time, good amount of work has happened. Our penetration has increased sequentially both the years that we acquired. And as I mentioned, the job there for us is to keep building penetration. HFD as a category has roughly 25% penetration levels. And we know that India as a country our food plate by and large is heavy on carbohydrates and deficient in micronutrient. This is exactly the sweet spot where HFD as a category has a space and needs to grow. And which is why for us the focus in this space is to drive market development and hence drive penetration, build that, and then build consumption. To some extent, as a discretionary category, we have seen impact of milk coming in. But as I mentioned, those are factors temporary here and now. But the long-term job to be done does not change.
Okay, sir, I have a question. Hope you won't mind asking in Hindi.
बोलिए.
Yes, sir. So, आपने इंडिया की बात की, we are growing and आने वाले साल में elections भी है. Election के time पे हम देखते हैं कि consumer companies को एक benefit मिलता है क्योंकि demand को boost करने के लिए government की तरफ से काफी सारे steps लिए जाते हैं. And जैसे कि सर ने बताया, rural demand pick up हो रही है, positive में turn भी हो रही है of growth. तो आने वाले एक साल में अगर हम volume growth को देखें, not only for HUL but at India level FMCG, coming the incentives coming from the government side also to boost the demand. कैसा लगता है आपको आने वाला साल, specifically entering into the election year, demand will boost or not?
मैं आपको हिंदी में ही जवाब देता हूँ और फिर रितेश जो है अगर कुछ उसमें ऐड करना चाहते हैं तो थोड़ा बीच में हो सकता है मैं इंग्लिश बोल, बट मेरा प्रयत्न रहेगा कि मैं हिंदी में ही आपसे बात करूँ. बट जैसा आपने पहले कहा, अगर आप सिर्फ एक साल या 1-2 महीने की बात ना सोचें बट थोड़ा ऊपर से देखें इसमें, तो हमारे देश में जो है जो पर कैपिटा कंजम्पशन है वो एफएमसीजी काफ़ी कम है कंपेयर टू बाकी देशों के मुकाबले. तो जो लॉन्ग टर्म ट्रैजेक्टरी है उसमें तो ग्रोथ आनी ही है क्योंकि जो है हमारा देश बढ़ रहा है आगे और उस तरह जो है हमारे लोग जो है उनको और प्रॉस्पेरिटी मिल रही है, वो लोग बढ़ रहे हैं आगे. तो अपग्रेडेशन जो है ये एक तरह से नेचुरल है. तो अगर लंबे समय से देखा जाए तो सारी कैटेगरीज ग्रो करेंगी और हमारी जो कैटेगरीज हैं उसमें कम से कम अभी भी बहुत बहुत सालों का ग्रोथ बाकी है. तो अब उस पर कई साल ऐसे होंगे जो ग्रोथ ज्यादा होगी, कई साल ऐसे होंगे जो शायद थोड़ी कम होगी, बट ऑन द एवरेज जो है सब अपॉर्चुनिटी जो है कंट्री में बहुत है जितनी भी हम लोग कैटेगरीज में काम करते हैं. अब जहां तक अगले साल का सवाल है तो अभी तो ऑलरेडी हम लोग देख रहे हैं कि जो है बेहतरी हो रही है, रूरल वॉल्यूम्स में बेहतरी हो रही है, अर्बन में भी हो रही है. तो धीरे धीरे जैसे जो है इन्फ्लेशन का इफेक्ट कम होता जाएगा वैसे जो है डिमांड बढ़ती जाएगी और ग्रोथ आती जाएगी जब तक कि वो नेचुरल लेवल पे नहीं पहुंच पाती. और हम जानते हैं कि जो है सरकार की तरफ से काफी प्रयत्न हो रहा है रूरल एरियाज को बढ़ाने के लिए, अर्बन इंफ्रास्ट्रक्चर बन रहा है. तो ये सब जो है पॉजिटिव मैक्रो फैक्टर्स हैं. तो जो मेरा अपना विचार है कि हमारे देश में हमारी कैटेगरीज के लिए जो भविष्य है काफी ब्राइट है और जो भी लोग कंज्यूमर को सर्व करेंगे अच्छी तरह से वो लोग इस देश में आगे बढ़ेंगे.
क्योंकि पिछले कुछ दिनों में हमने देखा कि बड़े ब्रोकरेज हाउसेस भी इंडिया को लेके इतना पॉजिटिव है कि जो 9 साल में हमने किया वो शायद उसका इम्पैक्ट हमें आने वाले 2-3 साल में दिखेगा. और जब कंज्यूमर कंपनीज की बात आती है तो सबसे पहले उनकी ही ग्रोथ देखते हैं हम लोग, क्योंकि वो हमारा बेस होता है बेसिकली, क्योंकि हम लोग रूरल से जुड़े होते हैं, हर तरफ से जुड़े होते हैं, और इंसेंटिव्स भी काफी सारे आने वाले हैं, तो इसी पे सर एक बड़ा हो सकता है। इनफैक्ट प्रीमियम स्टोरी भी सर जो आप बता रहे थे उसकी स्ट्रेटेजी, तो अब मास से हम प्रीमियम जाने में कितने दूर है कि जो रूरल से जो ग्रोथ आएगी वो प्रीमियम की तरफ कितनी आ पाएगी?
हर तबके के लोग आगे बढ़ रहे हैं और हर जगह लोग अपग्रेड कर रहे हैं, हम जो देखते हैं। ऑफ कोर्स ये जरूरी है कि जैसे देश में प्रगति होती है तो अर्बन एरियाज में ज्यादा प्रगति होती है, अर्बनाइजेशन ज्यादा होता है। तो हम देख रहे हैं कि हर 5 साल बाद जो अपर इनकम हाउस होल्ड है वो बढ़ जाते हैं, वो ड्राइव करते हैं अपग्रेडेशन। पर वैसे देखा जाए तो रूरल में भी जो है हाउस होल्ड में प्रगति हो रही है। कुछ ये कोई एक सिंपल ट्रेंड नहीं है, कभी ऊपर कभी नीचे, बट ऑन द होल अगर हम हट के देखें 10 साल तो बहुत प्रगति हुई है। तो ऐसा ही अगले 10 साल में ज्यादा होना चाहिए, क्योंकि जो भी मैक्रो फैक्टर्स हैं वो इंडिया के फेवर में है। तो अगर हम लोग 1 साल या 1 महीना ऐसा ना सोचें, थोड़ा हट के देखें, तो हम लोग बहुत ऑप्टिमिस्टिक हैं कंट्री के फ्यूचर के लिए, हमारे कंपनी के फ्यूचर के लिए, और अभी बहुत एक्साइटमेंट हमें है और हम बहुत कुछ कर सकते हैं इस टाइम पे।
Ritesh, specifically on competitive intensity, I wanted your thoughts, because you said that as inflation comes down, all the smaller players come back as well. I remember some of your previous presentations where you had gained market share in 90% of your categories. Now that numbers come down to around 70-75 odd percent. You also said in your opening remarks that industry-wise volume growth was mid-single digits, whereas underlying volume growth for Hindustan Unilever this quarter has been 3%. Wanted to understand, in competitive intensity, what are the areas in specific where you're seeing this intensity, and is this across all SKUs of the portfolio? Is it from the premium end? Is it from some rural brand, local brand? Is it D2C brands? Just some more color on competitive intensity.
Sure. So let me speak a little bit on volumes and then get into competitiveness. We've seen market growth volume at mid-single digit. Remember, same period last year, market was declining by 6%. So if I look at a 2-year period, market is roughly flat on volume. We grew 6% same period last year, and on top of that 6%, we have grown 3% now. So, and which is why over 2-year period, we have substantial market share gain. That's number one. Number two, if you look at overall impact of cumulative inflation, if you just look at market pricing, and there's always a lag between the pricing that we will end up having as businesses when we sell and what consumers end up seeing. Over 2-year period, we're seeing 22% inflation in terms of pricing in FMCG industry. That does impact consumption, which is exactly what has happened. Now with inflation moderating as we speak, we do see that volumes will start recovering. Of course, it takes time. There's a trade pipeline. Consumers also have pantry inventory in their house. So by the time we decrease our price, trade sells the old high price stock, consumers finish using the higher price inventory at home, and they start experiencing the lower price stock. That transition takes 2 to 3 quarters. And we've seen in the past, for laundry, for tea, for skin cleansing last decade or two, we've seen that experience. It takes 2-3 quarters for volume to start coming up. Now, if I just bring back competitiveness, as I mentioned, that overall where market has moved, we have grown on a base of 6% volume growth last year. We grow further 3% volume. More than 75% of the business is winning market share, value and volume market share. Are there pockets where we see stress this point in time? Answer is yes. We do see in mass segment in certain regions dip in certain parts of the portfolio, but that's business. We know that. Sorry?
What categories?
Yeah, as I mentioned, for reasons of competitiveness, I will not be much detail, but just let me mention in few pockets in mass segment and in few regions, we have seen some dips in our market share. But such is business. You will always have some puts and take in the business. We have plans in place, which is why one of the points I mentioned earlier, maintaining the right price value equation becomes extremely critical for us. And this is what has been our focus area as I called it out. So overall, our market share performance, as I mentioned, if I look at 2-year period, substantial business growth ahead of the market growth, and which is why we've seen a good amount of market share gains over the last couple of years' time in the business.
We have time for one final question.
Okay. So I'm going to squeeze in 2 and 1 then.
Right.
One is pace of volume growth, macro environments are improving. Everything on that terms is improving. Then what would be the pace of volume growth that you would see coming in for HUL going forward? And also in terms of just on ground, what are you hearing in terms of, there was some stress in terms of tea, HFT, the demand trends, food segment over there. Anything that is giving you a confidence that you are seeing a stronger growth going forward in these segments?
Yeah. Let me unpack our volume growth a little more. So if you look at our volume growth this quarter, 3%, 75% of the business sits in home care and beauty and personal care. That part of the business, our volumes have grown in a range of mid-single digit to high single digit. Foods and refreshment as a segment, which is roughly 25% of our business, there our volume growths are near flat. 2/3 of the business in foods and refreshment sits in tea and HFD. We know in tea what has happened, that premium tea and loose tea prices have been divergent. And because of that, we have seen market downgrading. We grew tea modest this quarter. And you know that we have very strong market leadership position in tea business. But we have seen downgradation impact coming in on overall growth of premium teas, and we are over-indexed on premium tea. HFD, I mentioned because of high amount of input cost inflation, our growth has been a price-led growth, and which is why overall that also contributes to volume growth momentum in FNR. Ice cream had a tough quarter in terms of market situation. As you know, in April month we had unseasonal rains. We grew in mid-single digit on back of an extremely strong ice cream season last year. But in this quarter we had mid-single digit growth where April month was impacted. Coffee, again, one more category where if I look at 1 year, 2 year, substantial amount of inflation. And which is why, again, in coffee, our growth has been price-led and we have declined volumes in coffee, as you've seen. So that's overall summary, and which is why there is 75% of the business which has grown mid-single digit to high single digit of volume, and parts of the portfolio which have basically has been held near flat volume growth. So that's a take. If I now see going forward, now the soft commodity inflation, be it coffee, be it milk, it is not changing substantially next couple of quarters. As I mentioned, whenever we have seen moderation of commodity, large categories, skin cleansing, where skin cleansing growth, as you remember, was a price-led growth, and there's a substantial amount of moderation in palm oil price, and hence reflection of that into skin cleansing pricing. Laundry very similar, both Indian rupee and crude. Indian rupee has been stable, and crude has meaningfully corrected from the peak. So when such prices come down, we have taken pricing actions across portfolio which are driven by such commodity decreases, be it skin cleansing, be it laundry. And the impact of these price decreases, as I mentioned, takes 2 to 3 quarters to fully land consumers to experience lower price product and then come back with higher consumption behavior. And this exactly is the point I was making earlier, that consumption recovery will be gradual over 2-3 quarters. Yeah, but I hope that explanation between unpacking the volumes across categories and that put together gives you a sense of where we are headed.
If I can, just a two-word answer.
Yeah, go ahead. One last, let's take.
Oziva and VWash, the acquisitions, how have they scaled up?
Yeah. So VWash acquisitions, you know, we bought a couple of years back, and VWash has done pretty good business. It's in line with the business case that we are working with on VWash. Oziva is a recent purchase, you remember. In January, we acquired the business. Very early days. The business has fabulous potential. Health and well-being segment overall has a long promise in the country. It is just beginning in terms of its penetration cycles. So we do believe that, and we look at from a total portfolio perspective. We do have Oziva. As you know, we also have strategic investment in well-being nutrition. And we mentioned in the past, as and when right time comes, we will further bring brands from the stable of Unilever. And there's some fabulous brands we have globally as Unilever in the space of health and well-being. So this is a segment which has long promise, long road to grow. Very initial days at this point in time. What we are focusing on for Oziva is to ensure that the portfolio is clean, and we have done certain action to ensure that we have a portfolio which is future fit and starts to grow. We are investing in the business. We are looking at further expanding distribution of the business. So lots of work happening. It's been a few months since we acquired the business, but we will share more details in times to come. Thank you so much. Appreciate it.
Thank you.
Thank you, sir. It was nice meeting you. Hope to see you soon.
Of course. Coming to us. Thank you, Macha. Thank you for asking the question.
Thank you, sir.
Always a pleasure.
Thank you so much, sir.
See you around.
Yes.
Sir, I also asked for Ritesh. I was like, I have not practiced my Hindi, so I'm like,
Thanks, Ritesh.
Yeah, thank you.
I'll just